Coming up in this show, I'm going to bring you my opening comments on the markets. Avi has a trade idea, and you're going to get a lesson in what points to a bullish setup in ConocoPhillips. And you can see the release of our amazing day trader service. This is coming very soon. And I'll show you analysis on the stock market. I'll bring you analysis on the S&P 500, NASDAQ, and the Russell. And the question, have the worst levels been seen in this correction?
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market was mixed to higher last week, as the investment world seemed much calmer than the rest of the world, which is seemingly ready to boil over. The stock market started out the week to the downside after the beyond horrible attack on Israel by Hamas terrorists, and what clearly was going to be a devastating response and a humanitarian crisis to follow, as Israel acts to be certain that this happens never again. Stocks, however, recovered and remained mostly firm as dovish Fed talk and a flight to safety sent yields to the downside. Inflation numbers were slightly hotter than expected, and the Fed minutes slightly more hawkish. But that was all dated information, as people were glued to TVs watching a nightmare unfold. The stock market, well, it was strong through Thursday afternoon, but that rally was interrupted by a terrible 30-year auction. And it showed how massive government overspending and building of debt is causing a supply that is overwhelming the market. This is in line with my belief that interest rates now are structurally higher, and though there will be short-term rallies in the bond market, that a downtrend that we see now is well entrenched, and we're very likely to see a bond bear market for a long time to come. Friday, we actually saw the bond market reverse back to the upside and gave some of that up as a safety bid comes in. And we saw the S&P 500 gain more than 20 points early, but then went negative as investors are clearly nervous. The bigger picture for the stock market has not changed yet, though the tone of the market has improved some. We have looked for weakness into late October. And the recent rise is strong enough to us to look at the potential that the low levels for this correction have been seen. Still, the next few weeks are dangerous, and there is a likely test of last week's lows coming before a better period follows. I'll show you those patterns and the key levels later in the show. For now, it makes sense to be cautious, as risks are very high. We all know why. For the week, so far here at midday, stocks are mixed. The S&P 500, NASDAQ, and the Dow are showing some small gains, while the Russell is much worse, and I'll show you that as we look at the short-term patterns coming up. Bond market 30s gain about 3 3/4 points, and 10-year yields fall by about 15 basis points. That's a big downside move. The gold market is surging right now, as safe haven demand comes in based on the Middle East turmoil, gaining some $80 on the week, and silver is also surging up about 90 cents following the gold market. However, there's not really a confirmation going on as gold and silver move into resistance areas, as platinum and copper are moving down. So this was a very mixed week, and you can see based on what's going on in the metals, this is a safety bid that's coming in as things are scary. The dollar gains 0.4%, and there are signs that it has peaked. And we're going to be looking for more of that downside in the dollar coming in the next week. Of course, that could be more support for the metals markets. Oil, very choppy this week, gaining right now about 3 points, and that is a pretty mild uptick based on the potential for more Iran sanctions coming, as clearly they had their hand in this Mideast turmoil. So that is the opening. I want to remind you to go to askSlim.com. You want to get acquainted with who we are. You can now sign up for our Stock Index Report Lite. That is free. Go to the front page and you'll be able to sign up for that for free. And you'll get information on the S&P 500 every single day sent to your mailbox. On YouTube, subscribe to our channel, click the notification bell, and do like this video. Give it a thumbs up. And on X, follow us at askSlim. Questions you have on our analysis or anything that I've shown you here, please write to Matt at askSlim.com. This is a trade idea, and Arvy's going to give you a lesson in cycle analysis. This is fantastic work by Arvy, and he's going to show you why the ConocoPhillips pattern is bullish, and you're going to learn a lot from this. And you're going to learn how we raise the odds of success with our style of analysis. Arvy, show it to him.
Hello guys, this is Arvind Ramachandran, and in this video what we're going to do is walk through a short-term long biased trade idea in ConocoPhillips. That's symbol COP. What we've seen here in COP is a sizable sell-off and then a rally that really came right on time, in that we did have a weekly and daily low that was due to form, and I will share that overall cycle analysis with you shortly. One thing to note is, if you are interested in signing up for our Trade Ideas service, please go ahead and sign up for a level 3 membership or higher at askSlim.com, and you will get our trade ideas that we post. And as you will see in this video, they have quite a bit of detail in that we walk through both our weekly and daily cycle analysis, along with our logic and our levels on both the upside and downside. So please go ahead and enjoy this video. This is an askSlim trade idea video walkthrough for a short-term long in ConocoPhillips. That's symbol COP. Now, I did mention on Wednesday in Future Speak that we have been positive and are positive on the oil stocks. And what we're looking at here is a likely key low that has formed in COP. That low is due 821 to 1016. And we are poised for a move very easily through these old highs at 125.39, and really looking for a move through these old highs at 136 on the intermediate term. This is a really bullish basing cycle now that has formed here, with this higher low versus that low right there. And this is also a right-hand translation, where in this black cycle, we have used up that whole cycle rallying. It left a short window of time for a pullback. That's this sell-off right here. And we are likely heading back to the upside. Jump over to the daily chart. Okay, so I wanted to see this try to form a higher low, and you can see that it did yesterday and is now holding up, basically holding sideways. What we're now just looking for is just any small little pullback. I don't know if it's going to get all the way down here. We'll have to see, but that's 118.77 to 116.63. If it closes below the minor 78.6 at 115.10, that would render this idea no longer valid. Looking for a move through these old highs at 125.43, and then there's a short-term 100 at 126.36, and that's what we are looking for here on the upside in COP. So you can see it is just below that 78.6 fib. So that's why I am only looking to put this idea as a long idea if it can just get a pullback versus that 78.6 fib and then go after that. We'll have to see how this acts. But overall, the bias is clearly pointed to the upside here. And I like that this name is acting well in the group. So that's why we are primarily focused here on COP. We'll also probably do a long idea in the XOP shortly as well. So just want to keep that one on your radar. Overall, we are quite positive here on the oil stocks, and we would look for only small pullbacks and then for them to overall be headed higher. That would clearly say to me, at least, that oil may be just putting in a late low as we're seeing this strong sell-off in oil. Let me show that to you just briefly. You can see that that's selling right here in /CL. That does make sense if we're looking for oils to actually form an intermediate term low. That forecast CL would probably be forming that low around that same time. So rather than this being an early low, this is more likely a late low, but let's keep an eye on it. If we jump over to that daily chart, you can see we're just holding sideways here, and note that while that's happening, oil stocks are actually holding at higher levels and poised to turn up. So that is a positive sign for crude oil as well. So all of this is really syncing up to a likely pop coming in both CL as well as that of oil stocks. If you have any questions, feel free to send me an email. Thanks again and have a great day.
Super work on that, and I sure hope you all learned something regarding cycle analysis. Stock market analysis, projections on the S&P 500 and more, and I'm going to show you this important information right now regarding our analytical style. So please take a moment, read this. It talks about how we approach the market, our analysis, and what that means for you as you use our information. Announcing, I'm so excited to tell you about this. We have been working on this for months and months and months. The new askSlim Day Trader service. And what this is going to feature is something that we've already had, the stock index report intraday grid, which you can see on the right side, right over here. And what that is the S&P 500, the NASDAQ, and the Russell. I'll show you more about that in a second. And on the left is a chart that has an example of when our impulse monitor gives signals. And I'm going to show you more about that in just a second. This launches in a week on October 20th, and you can reserve your spot for 50% off, a very low price, by going to our website. This is our SIR intraday grid. This is daily key price zones and a roadmap for you on the S&P 500, NASDAQ, Russell. This is live, and you get this every single morning with our key price activation points, the breakout breakdown levels and acceleration zones, which are those yellow zones. And you can see in here as it gets into them how they accelerate through, and the very key intraday support and resistance. The darker it gets, the tougher the resistance is, and the key intraday zones that you will see there. And our reversal scout, which is that line in there that keeps you on the right side of the market, whether it be bullish or bearish. This is update all of the time. Let's take a look here. This is the look at what it looks like on a mobile device. You see this area here where it's green on the mobile device? That tells you that the impulse condition bias is positive and that there is an impulse to the upside on. This is going to help you maximize those trades. Stay with the trade for long periods of time until it tells you the impulse is over. Unbelievable information. And of course, this is what the SIR looks like with the impulse monitor right there on the top. Here's a little legend that you can see here, and that is the key conditions for the impulse monitor. When it is solid green, conditions exist for an upward impulse. This is how you catch those big moves to the upside. Or when it's red, conditions exist that there's a downward impulse. This is where you catch those big moves to the downside. If it turns neutral, we're going to tell you the bias. What is the highest probability of the next direction? Fantastic. This will really help you get set up for when those moves come, and you'll be able to know when it's neutral or when it's the impulse monitor is completely off. So this is unbelievably great information. Go to askSlim.com, to the top of the website, and reserve your 50% off for the first month. All of this information, catch those big moves for day traders, for scalpers, for $17.50. This is going to be your opportunity to really test out this fantastic application, this great service. Questions, write Matt at askSlim.com. You are going to absolutely love this. And one more announcement. Market Week Live That is coming with our pilot show starting on Friday, October 20th at noon Eastern Time. Yes, you're going to be able to see us earlier in the day. Right now, we're planning on this for a couple of times a month. Premium members, you're going to be sent a Zoom link to be able to participate. You'll be able to be in on the Q&A because we're going to have our whole analytical team there. And for free members or non-members, you can watch it live on YouTube at noon. Just go to YouTube to our page, askSlim Team, and you'll be able to watch our whole analytical team live. Information you might want on that, write to team@askSlim.com. Market Week Live starting next week. Here comes the analysis on the stock market. We're going to look at the intermediate analysis on the SPX, and then we're going to look at some short-term comparisons on the S&P 500, NASDAQ, and the Russell. Of course, we know we've got turmoil going on right now in the Mideast, and that has the markets extremely nervous. But still, the analysis is really holding up. And we're looking at a market that tried to rally and now is giving some of that back. And clearly, the market tried to move to the upside, but the momentum conditions are still very negative, and the patterns are still warning of trouble. And we have to be very concerned with that as we look at these charts. So this is the S&P 500 on the weekly chart. And we have shown for just months and months and months that we thought that this market would roll over in here in this period in August, September, and that September, October, potentially into early November was going to be a period of weakness. Now, the market decline is not very much, and it really, based on this low being way down here and what we call the configuration in this cycle, it points to another rally coming out over here November, December. Now, what you can see in here is that the momentum is still negative. And this is our reversal scout, and that is a great way to not only understand the movement in the market cycles, but the conditions of the market. And you could see it tried to rally in here, but the rally that everybody's gotten so wildly bullish over that we're off to the races it really looks like it's not quite ready to do so. There is a potential, as we've said, for the market to pull back in here into this period into late October. So the low that we had right over here on the S&P 500 is about 42.18. Right now we're at 43.40. It's not that far, and there is a potential for it to get down here and test these lows or get lower. This area around 4100 is really the area that we had looked at as an extreme on the downside. And I can't rule that out because we are still in this period of risk. That's period of risk are those yellow ovals, which really show you when the market has risk of going down based on these cycle patterns in here. These yellow ovals in the bottom here are telling you that FEZ and FXI still have some risk out there into November, December, and that might keep the market from being able to get too far on the upside. So we're in this final stages of this period of risk right over here, with some likelihood that the market is going to continue to flail in here and have maybe one more capitulation in this time period out through the end of October. Now let's look at some comparative charts. These are interesting charts because I have the S&P 500, the NASDAQ, and the Russell on the daily charts, and I'm looking at the comparisons in here on these charts and the momentum conditions short term based on the slim ribbon PO and based on our option bias indicator. And I'm going to blow each of these up so you'll be able to see what these look like. But clearly you can see the Russell is very weak. And we have talked about the pattern in the Russell, that cycle that you can see on the bottom. That's a cycle bracket, just giving you the average distances in the cycle rhythms, that it was also playing out on these other indexes. And I'll show you that as I blow this up. So let's look first at the Russell. And here's that Russell pattern. And what we have had in here now, the option bias indicator has been neutral. That's yellow, if you can see that in there. So there's not much showing there. But you can see here the slim ribbon PO right over here, which has been giving you these red signals. In other words, momentum negative and the downside resumption, which is telling you about the negative conditions. And look and see the Russell is getting close to coming down to that last low. This points to the low out somewhere around November 1st for the Russell. In other words, there can be a lot of downside pressure in here. Now, the Russell is often very reflective of two things. Number one, that it's filled with companies that lose money, and that it's very susceptible to the rates going up and it really hurting the potential for earnings in those companies. The other thing is there's a lot of financials in here, and when the financials are moving down, then that often affects this also on the downside. It failed here in resistance, as you can see, and the warning levels over here, it didn't really get near. So this is still leading on the downside and quite negative for the Russell. Again, this points to declines, and you can see our three different tracks that we have in here, with the likelihood of it at best case coming down here and testing those lows, with a potential for a move down to 1637 at that support level down there sometime around the end of October. Now I'm going to move to the NASDAQ, and you can see this green dash. That is the Russell I just showed you. But clearly the NASDAQ is much stronger. It got very close to that repair level right over there that we had listed. And if it would have gotten through there, it would have warned us that that intermediate bottom that we just looked at was in place, at least for the NASDAQ. And that if it came down, it might set up a positive pattern in here, or at worst, test the low. But right now, it avoided that getting through that repair level, as we call it, which was right around, let me just take a look here, right around 15,360, and that is still a very key level. Again, this is the period of risk over here continuing out into the late October to beginning November period. If it gets above that level at 13,360, it will warn us that there's a higher potential that the bottom is in place in the stock market. If it moves above this level right over here, which is that last cycle peak, 15,670, 15,600, I'm sorry, then that would warn us that the low is in place. It would be a much higher probability that the intermediate low is in place. Again, we're looking at neutral reading right over here. And you can see that what was happening is that this was giving us downside resumption warnings, but it was resisting that and then went neutral and then actually went short-term positive. So you could see that the NASDAQ is much stronger than the Russell looking at that. And as it moved very far away from this low, where the Russell is testing the low right now. So you have this disparity going on with the junk stocks that are in the Russell much weaker than the tech-led stocks that are here in the NASDAQ. Again, watch those key levels up there because they will then warn us that something had changed in the market. We are always looking at that, at the highest probabilities and the information that is coming from the market because it speaks to us with all in this style of analysis, most certainly, and we're always watching for that. Highest probability is that there is a further decline over here. If it gets through the pair level or this key level here through that cycle peak, it will then warn us that that low is in place on the intermediate chart. Now we take a look here at the S&P 500. This looking similar to what we see here in the NASDAQ as it got up into the resistance level here, but quite a distance from what the repair level would have been, right around 44.70. So a big distance from that and failing in resistance here. Again, the probability is that this will bring more weakness out over here in towards this end of October period. And then we get into the November-December period where the market certainly has a higher probability of being better. Over 44.60 We get a 44.70, we get a warning that it has repaired itself, and then over this level right over here at 45.40, and then we know that that cycle bottom is in place. You see, confirms intermediate cycle bottom. We have those messages always in there for our members. I want you to note here that the option bias indicator has stayed negative, so this is weaker than the NASDAQ. And while the momentum here has neutralized, it is also weaker than the NASDAQ. So you have the NASDAQ, the strongest index, the S&P 500 the next, and then the Russell certainly much weaker than we have what we're looking at in here again. The weekly chart is so important to really focus on also in this period of likely one more move down, and on those daily charts showing you the potential for that capitulation. So that is a look at the S&P 500 weekly, the comparative charts, short-term comparisons in the SPX, NDX, and RUT, and the key levels to watch for. Highest probability that there will be further move to the downside to test or surpass those lows on the downside, but then the market will tell us if it moves through those key levels as I just gave to you. That's always important to know. All the information, remember, we are agnostic analysts, and that means that we listen to what the market tells us. We have a very distinct method to our analysis, and if you want to learn that, please go check out our cycle analysis workshop on our website. There is a special coming for that in not too long, just some weeks out there, and you're going to be able to learn this style of analysis because it will make a huge difference. And if you do, you'll never look at charts the same way. That's it. I want you to make sure that you go to our website, get acquainted, sign up for SIR Lite if you're brand new here, and that will give you information that we put out every day for free on the S&P 500. This is brand new and a great opportunity for you to get a taste of what we do. On YouTube, subscribe to our channel, click that notification bell, like this video, and watch the member videos in the playlist. On X, follow us at askSlim. And any questions you have on all the things I just showed, write to Matt at askSlim.com. That's it. I want you to be so incredibly careful. It is so unbelievably crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit